Why Warren Buffett hates real estate. Unveiling the ugly truth. Warren Buffett's aversion to real estate stems from its limited mispricing opportunities. Because unlike some lucrative mispricing opportunities during the RDC era, finding undervalued real estate is typically a challenge. But how does this play out in a competitive market where everyone seems to know the ropes? In this video, we will dive into the surprising truth behind Buffett's reluctance into real estate and discover why, despite occasional opportunities, it remains a peripheral consideration for Berkshire Hathaway. Warren Buffett's investment strategy is successful in various market conditions. He keeps things simple by choosing solid companies for long-term growth. What sets him apart is his ability to ignore market noise that causes panic among other investors. Buffett's strategy relies on enduring qualities in companies, making his portfolio resilient in economic ups and downs. Instead of chasing short-term gains, he prioritizes the fundamentals of businesses, emphasizing lasting value over fleeting trends. His commitment to his investment philosophy is unwavering. While others might be tempted by quick profits and speculative ventures, Buffett stays true to his principles. He looks beyond market speculation, focusing on the intrinsic value of companies and their potential for sustained growth. Buffett's simplicity stands out in a world often clouded by complexity. His strategy resonates with common investors, offering stability amidst market uncertainties. By staying disciplined and true to his principles, Buffett showcases the power of a patient, long-term perspective. Warren Buffett maintains a cautious stance toward real estate, opting for limited ownership, notably limited to a 40-acre farm and his personal residence. This selective approach is aligned with his broader investment strategy, emphasizing a preference for solid companies over extensive real estate holdings. Buffett acknowledges a crucial distinction between buying real estate and investing in it. While he hasn't shied away from investing in real estate investment trusts, he emphasizes the critical aspect that real estate is more of a business than a passive investment. This distinction underscores his commitment to focusing on areas where he can apply his expertise effectively. The emphasis on real estate as a business aligns with Buffett's overarching philosophy of investing time and resources where they can yield the highest returns. He recognizes that buying and managing real estate involves significant operational efforts, making it more akin to running a business than a passive investment. By refraining from extensive real estate ownership, Buffett underscores the importance of aligning investments with one's core competencies. His approach is a testament to the idea that successful investing requires a deep understanding of the chosen assets. In Buffett's case, his time is better spent evaluating companies and businesses where his expertise has historically yielded substantial returns. This deliberate approach to real estate reflects his commitment to maintaining a focus on areas where he can add the most value. Warren Buffett's preference for choosing companies over running a real estate business is a key aspect of his investment strategy. By focusing on companies, he aligns with his expertise and avoids the complexities associated with managing real estate operations. This deliberate choice underscores his commitment to investing where he can maximize returns and add significant value. Buffett recognizes that managing real estate demands substantial time, energy, and financial resources. Unlike the misconception of real estate as a source of passive income, Buffett understands the active nature of real estate businesses. By steering clear of becoming a landlord or engaging in extensive real estate operations, he prioritizes his efforts where he can leverage his skills effectively. The misconception of real estate as a purely passive income source is widespread among individual investors. Buffett's insights shed light on the reality that real estate, when directly owned and managed, is more of a hands-on business venture than a passive investment. This clarity helps investors understand the nuances of real estate and avoid potential pitfalls associated with false expectations. But that's not the main reason. Later in the video, you will find out about the unique challenges Warren Buffett faces in the real estate market. So stick till the end and subscribe to the channel. Warren Buffett's approach to real estate includes a strategic embrace of passive investments, notably through real estate investment trusts. Right? By investing in these trusts, Buffett aligns with the notion of passive real estate investments. avoiding the direct management responsibilities associated with owning physical properties. This choice showcases his inclination towards a more hands-off approach to real estate. Passive real estate investments, particularly through publicly traded REITs, offer distinct benefits. Investors in REITs can enjoy the advantages of real estate ownership without the burden of active management. This aligns with Buffett's overall strategy of seeking opportunities that provide returns without requiring hands-on involvement, allowing him to focus on his core competencies in selecting and managing companies. The FTSE Nareit All Equity REITs Index serves as a notable benchmark for passive real estate investments. Statistics reveal that, over the past 20 years, this index has delivered a total annual return of 12.7%, surpassing the S&P 500's return of 9.5%. These figures highlight the potential for attractive returns in passive real estate investments, providing a compelling argument for those seeking exposure to the real estate market without the complexities of direct ownership. Private real estate markets present enticing opportunities, as exemplified by higher returns reported by platforms like CrowdStreet. These platforms have demonstrated an average internal rate of return, IRR, of around 17% for investors on fully realized deals since 2014. Buffett's aversion to traditional real estate practices might find a counterpoint in these private market platforms, where the potential for substantial returns attracts investors seeking alternatives to conventional real estate ventures. Passive investors now have accessible avenues to enter the real estate market by purchasing shares of individual rental properties with minimal investment. Platforms, including those backed by prominent figures like Jeff Bezos, have facilitated the democratization of real estate investments. This evolution aligns with the broader trend of making investment opportunities more inclusive, providing a feasible entry point for individuals looking to participate in real estate without the challenges of direct ownership or management. Notable success stories in the private real estate investment sector underscore its credibility. Platforms supported by influential figures like Jeff Bezos have fully funded over 200 rental properties, exceeding a total value of $75 million since their launch in 2021. These platforms have not only attracted substantial investments but have also distributed dividends, exemplifying the viability and success of private real estate opportunities. Warren Buffett's keen observation centers on the accurate pricing of developed real estate. He recognizes that, under normal conditions, determining mispriced real estate poses a significant challenge. Unlike some assets that might be undervalued due to market inefficiencies, developed real estate tends to be accurately priced most of the time. This insight guides Buffett's cautious approach to real estate investments, highlighting the difficulty in finding opportunities for substantial returns. The challenges in identifying mispriced real estate become more apparent during periods of chaos in financing. While inefficiencies may rise during such tumultuous times, Buffett implies that these instances are exceptions rather than the rule. Real estate markets typically operate with a level of efficiency, making it hard to find significant mispricing except in unique circumstances of market upheaval. Buffett's limited interest in real estate is a result of a combination of factors. Unfavorable tax strictures for corporations, such as Berkshire Hathaway, create an economic disadvantage in real estate investments. Additionally, acknowledging his lack of specialized competence in the field, Buffett chooses to allocate minimal time to real estate ventures. These factors collectively contribute to his strategic decision to focus on areas where he can apply his expertise more effectively. Warren Buffett reflects on missed opportunities, notably during the RDC, Resolution Trust Corporation, days. He acknowledges that during this period, when inefficiencies were more prevalent due to massive transactions and uncertain ownership, there were potential opportunities for substantial gains. Although Buffett had some interesting transactions during this time, he conveys that these were not significant in relation to Berkshire Hathaway's total capital. The acknowledgement of missed opportunities during this unique market period suggests a recognition of the occasional inefficiencies that can occur in real estate, but also highlights the difficulty of making truly impactful investments. One notable potential transaction mentioned is the consideration of the Irving Corporation in 1977. While this represents a case where Buffett seriously contemplated a significant real estate move, it didn't materialize into a major venture. The passing mention of this opportunity provides insight into the rare instances where Buffett contemplated large-scale real estate investments. Despite these reflections, Buffett expresses skepticism about significant future real estate ventures. The unfavorable tax structure of Berkshire Hathaway, being a C corporation, creates a notable disadvantage in real estate investments. This economic barrier, combined with the competitive nature of the real estate market, leads Buffett to deem significant ventures in this sector as unlikely. These factors collectively shape his cautious approach to real estate, emphasizing a strategic focus on areas where Berkshire Hathaway can thrive. What's your thoughts on this? Let us know in the comment section below. Also, make sure to like this video and subscribe to the channel for more. Meanwhile, thanks for watching.